now. And to kick off this Nautical Institute event, we'd like to welcome the panel of guests here, along with Dr. Hakan for the time. But to introduce the Nautical Institute's UAE branch, our main focus is towards seafarers' welfare. And that is, in any shape or form, any seafarer at any vessels within the region here who are in distress, we would like to go out there and provide the outreach and assistance to them. As you know, there's always been a lot of cases of crew abandonment where owners just walk away from their vessel and their cargo, and more importantly, the crew, where crews are left stranded. My personal experience on a salvage job 2 years ago, there was a tanker that was abandoned off Al-Quwain anchorage, and no one could understand what was going on because she was abandoned. And there were 4 crew members on board. And we only discovered that they were abandoned when she did not have any power, no fuel, nothing to run it. And because of the inclement of weather, she ran aground in Al-Quwain's beach. These men were on board for 4 years. 4 years on board, begging for food, looking for help, but no one could assist them. So it spurred me on personally on my account that I'm part of the Nautical Institute purely for this purpose, to help seafarers. Being an ex-seafarer myself, and still going out to sea, I believe a lot of attention or illumination towards the seafarer's plight needs to be given. One of the cases that we recently attended to was 2 vessels at a crew abandonment of Sharjah, and then she was shifted to Hakan. And we understood this crew abandonment case through the International Transport Federation, ITF. And the Nautical Institute, along with its committee members, band together and decided, like, what direction do we take to help these men? And so we just got onto a war footing, and knowing our links and connections within the industry, decided to move forward. With my esteemed colleagues in the committee, we had one committee member who was part of a Sea Master who decided or assisted in the support of the discharge of the cargo. We have also Captain Shamshir Singh, who was with Hon.FIIMS, and he pitched up to provide some local barrister preparedness to talk to the port authorities. And we also roped in Captain Gajanan here from Rido in India, which is rescuing Indians distressed overseas. So we formulated a plan. We had a meeting with Hakan, port director, and I must admit, for the first time in the Sharjah Emirates, they were extremely proactive in assisting the seafarers. So one of the first things they decided to do, and again, it was for the first time I saw this, was that they decided to accept this vessel as an abandoned wreck. So the port authorities legally are bound to deal with it. So they said, look, we will auction this vessel. We will ensure that the crew is paid and repatriated. So it was comforting to us. But we were still monitoring it. We got these crew members were not members of the Seafarers Union in India. Majority of them were Indian nationals. And so through Captain Gajanan, we directed the General of Shipping we got the union involved. And we introduced the union as well with the master, and we had conference calls together with the master. And we were willing, or we were prepared already to even have them sign on as union members, just in case if something fell through, they can be repatriated and further legal formalities can be made for them to get their salaries later on. But having said that, the Nautical Institute raised about 10,000 dirhams just to provide food and the basic necessities. Captain Zarir from Constellation provided the communications with SIM cards. And what we understand now, and we are still monitoring it, is the owner has decided that he can't afford to have these vessels for auction. So he has sent representatives down now to speak to the port authorities and settle all dues and also take responsibility on the crew's salaries and repatriation. So right now we are still monitoring it very, very closely, but it goes to show that our main objective in this branch is towards seafarers' welfare. So if you do hear of any injustice towards seafarers or seafarers being abandoned, yeah, please reach out to us. No further ado, I shall present to Dr. Hakan first to kick off.
Hello, everyone. It's been an honor today to be with you, nice gentlemen, the panelists. It's been an honor to be here. Uh, Actually, I just wanted to start with a speech with a short piece of time and try to introduce myself and what we are doing and how this has been built. Uh, all of this happened in one day when I came to Dubai about 3 years ago. It's a short story that we were looking for some services regarding to the vessel evaluation inspection. I was looking to some companies to try to help us regarding to the finances that we are making. And I was searching on the internet, looking for some friends, trying to find a trusted party, expertise. And I came across with a name, Constellation Marine Service. And I sent a message to the gentleman, says that this is Hakan, and we are looking for a service about the evaluation inspection. He didn't even blink. In 4 minutes, he just responded me over. I'm available. This is my office location. I'm available anytime. You can come and join and we can talk. And that friendship happened that day with the Captain Zarir Irani. He honored me with a pleasureful hospitality, and he gave me the chance the first time as a financer go over the vessel by giving me permission to pass on it. And I do thank you, sir, for what you gave me and what you made me today. It's my first contribution to the Nautica. Today, I'm going to discuss about three main things, but basically I'm going to also cover some of the topics which my distinguished panelist is going to assist me regarding to this. And it's going to be regarding to the finance and regarding to the new innovations that is happening around the world about what is the finance is happening and what we should take care of it and what the banks should take care of it, and regarding to the legal side also, and regarding to the methodologies which is happening. So economical trends happening, and we are facing some new challenges that never been into the market. So when we're talking about the finance, it comes from the different things. We're talking about the interest rates, we're talking about the availability of the finance, we're talking about the volume of the trade which is essentially happening, we're talking about the currency fluctuations, new rules that establishing by the IMO, by the EU, and different things. So in order to have a more agile regarding to each of these transmissions that are happening, we should be first try to consider the global trends first, and then go back to what is available on the market. regarding to the first one, when I go to the interest rates, if you remember, during the past year, regarding to interest rate, we faced with some challenges. Even some of the finances provided by the banks in the US go for the SOFR rates. It was replaced with the LIBOR in some of the banks. And even some of the European banks was having challenges about the difference of the Euribor, SOFR, and they didn't know what to do because some of the finances had already been given, some of them under process, and the shipping market was going south because they didn't know which interest rate is, what happened to it, and how I'm going to react to this. So they stopped getting finance. What happened? So when the demand for the finance goes down, banks wanted to struggle, say, we don't know what will happen, ship owner wouldn't know what happens, so that it was going down. So some of the methodologies that some of the banks put in the funds is about giving the fixed rates for the first 2 years or the 3 years for the vessel owners, but they give it to the old customers, not for the new customers or the SMEs. So it comes to the challenge that how the banks will react to the finance based on the interest rates. So looking into the interest rates and regarding to the term of the interest rates happening, we need to consider it as a new challenge for the continuing of the 2024. Right now, we were discussing with the three banks located in Germany. You can't believe it. They are telling us that we can quote you the first fixed rate for the next 5 years. It is the first time happening. And they didn't want to go to the Euribor, they didn't want to go to the SOFR, and they wanted to make it fixed with the European Central Bank, which is happening. And the thing is that they came to the idea that if they didn't take care of these fluctuations, the vessel owners will stop getting the finance, and this market is going to be really south for them. So regarding to the currency fluctuation also, we experienced something between the euro and between the dollar. The dollar becomes stringent because of the interest rate of the Federal Reserve of the United States, and it affected to the market because some of the charter agreements have been happening in dollars, some of them happens in euros, and also regarding to the terms of the payments, vessel owners and even charters and brokers came to the idea that what we should do, everything is under changing. Even as you do know that for the vessel owner, the most important thing is, along with the OPEX, is the CAPEX. When it comes to the CAPEX, you should take care of the floating rate. Floating rate comes to what? SOFR, LIBOR, Euribor. You don't know what it is, but you need to hedge it. And when it comes to the hedge, it comes to the cost. So how you're going to take care of that cost is another challenge that the ship owners is going to face. And even in 2024, it's going to happen. Hedge funds, hedging companies, and hedge providers, OTC market, all of them are going to be put on the table to take care of these charters, brokers, and vessel owners regarding how they're going to control their challenges with these environments. And regarding the new rules passed, zero emission, decarbonization, EU, IMO, they passed so many laws that they're going to decrease the amount of the pollution that comes out of the vessel. And even banks got affected in the 2023. What happened? Based on the new rules of the EU Union, they passed a law for the blue economic sustainability finance. And they try to put these rules into the banks regarding reporting their portfolios of the finance that they're giving to the ship owner. Which type of the vessel, what is the amount of the pollution that comes out, and even banks' portfolios regarding to the vessel finance is going to be reported. So they're going to be directly responsible about the finance that they're giving and how much pollution they are contributing to the maritime environments. So it becomes really rigid. New laws is passing, IMO came over, and by the 2050, we are thinking about the allowance decreases. So in 2024, what I'm expecting, in 2024, I'm expecting that some of the even banks, hedge funds, equity funds, which are actually going to the finance, they gradually will move on to the green finance and green vessels and try to go to the green environment. Because they do know that if they don't do it within the next 2 to 3 years, and they didn't categorize and put the segmentation over the type of the customers, type of the vessel, and each cluster in a really precautionary manner, they're going to face with some penalties. They don't know it yet, but they are starting it. Now, who and when and how they are starting it, it's going to be funny. Greece is doing this. If you go through the internet and try to look at the Greece, there are some new SMEs are coming up. They are putting new ways of financing the vessels for the green vessels. New mechanisms of the blue bonds and climate bonds are coming up. So what we call it the Climate Bond Initiative. The CBI or Climate Bond Initiative established just some time ago, but they are becoming active and really interesting for most of the investors. Why is that? Because they came to the idea that we should make standards regarding to the type of the vessel which need to be financed. And they put all of the regulations of the IMO, EU, and amount of the pollution and emission as a criteria and requirements for getting a finance over the vessels through the bonds that they're going to represent. So any investor who is going to get those bonds already knew that. The CBI has put the requirements on it. So the investments that I'm going to put on this vessel as a finance, it's going to be for a green vessel. So the CBI started it. SMEs are going on it. Yes, we can say that 2024, 2025 is going to be all about new things and terms and conditions about the green vessels. This is a brief summary about the criteria that the CBI is doing regarding to the which type of the vessel that they're going to pass the requirements of the CBI to be included in the type of the finance which goes to the green one. Is the vessel dedicated to the transporting fossil fuels? No. Yes. Is the vessel zero emission? Will the vessel remain under the emissions intensity threshold? And has the issuer provided the MRP showing how the vessel can remain under the emission intensity threshold through the opening life? Yes, they're considering everything. CII, MRP, all of the indicators have been added to these bonds, the spatial bonds. And it is going to be much more interesting. So I'm just going to pass to one more thing. I'm going to pass to the PPS. What is a PPPS? So maybe most of you know about the public-private partnership, which is happening in the United States during the past 10 years. Kenya, Notre Dame, Amsterdam, some of the projects of expansion has come to the PPS because the governments and the public came into the idea that regarding to the governmental sort of the view, maritime need finances for some expansion projects regarding extending the ports, yards, shores, and facilities for having controlling the maritime environment and try to make it much more operational for the vessels, transportation, logistics, and maritime life. So, but these expertise, this kind of flexibility doesn't exist in the public, the governments. So they came into the idea that we need to continue the PPPS, means that the public-private partnership into a new type of arrangements. And based on that, they came to the idea that in the 2023 and 2024, we are facing with some of the new investments which is happening with the partnership of the private sector and the public sector for increasing the type of the projects about which is going to be happening and taking place. I just put a really short diagram here, which is trying to explain us what is the PPP stands for regarding to the type of the projects. When we start from the pure public project happening by the government, when we go to the pure private, there's only one single shot that we take it on it. The last one, top bottom, build, own, operate, transfer. This is what is happening around the world right now. This is the era, which means that the government wants to give the full control of the operation, expansion, construction, building, finance, everything to the private sector. I don't know anything. This is the place. This is a license. Go get it, make it, build it, finance it, and after everything come over, get the money out of the government is not going to stand alone. So private sector should project fully, and after the service fees come over, taken over it. And I don't want to go so much, crazy about it. Regarding to the case studies that happens regarding the PPPS, I just put some examples about what happened during the past few years, starting with at the Port of the Miami Tunnel in the United States. This project happens through the private of the Port of Miami, and the whole project would happen with the private sector, and government was just sitting there and supporting them by the licenses, and they built it. And out of the services, whole transportation came to a new era. After that, Rotterdam came over, and they made it one of the biggest ports in the EU, and by this private sector, they have used new technologies, new cranes, new systematic, which the public doesn't have any idea about it, and make it one of the modern ports in the EU. And again, in Kenya, this is the first time happening. The private sector tried to expand the port lines, and also we're going to the last one in the Greece, which happened and made it the big heaven for the ports. So regarding to the future trends, we are the last discussion that I'm going to talk about it, which is happening in the market right now, is about the crowdfunding. When we're talking about the crowdfunding was for the small projects, SMEs, startup, initiative companies. But now in the maritime sector, in the 2021 till 2023, some new initiative comes over as a startup and try to make the crowdfunding happen in the maritime sector. You haven't heard of it. It is not happening in the big size, but it is happening in the world. So if you want to have a look at it in the UAE, we need these companies to come over to the UAE and start doing some finances through the crowdfunding. These small initiatives gives the investors the opportunity, and even the finance takers who are looking for the finance, regarding to the adjustability, flexibility, timeliness, and how I'm going to get the finance based on the exact type of the finance that I require. These are not the traditional banks. These are specifically designed to the specific type of the project of the maritime. Gives the investor the option which type of the finance you're going to go into the maritime. Is it going to the maritime life? Is it going to the shipping, transportation, and even for the boats, make it a green boat type of the finance. Even they have done one small investment regarding to the some of the vessels which are on the Greece side and try to rebuild it from the ground by getting the finance from these initiatives. So regarding to the crowdfunding and regarding to the challenges they have, some of the companies have started some of the projects, which you can go over it. I don't want to talk about it so much, but some of them are doing really good. The Kickstarter, Indiegogo, Prosper, and GoFundMe, these are the companies which are actively happening regarding to the crowdfunding through the P2P, peer-to-peer finance, which is happening. And it is new in the maritime, and it is going to change. And this is something that the banks should be afraid of, because if these guys come over, it's not about the interest rate. It's about the type of the taste of the investor who wants to go green, who wants to invest in the green. And they don't have so much interest rate. They don't talk about that type. They're talking about the sense. Let me tell you something. The good thing about the crowdfunding and peer-to-peer is that these guys are making every investment a storyline. So the investor, that the person who is looking for the finance is going to have a story. They're going to share it, put it in the community, putting event on it. So the investor come over. It's just like making a water park. So they're going to see it. Yes, we're going to build this. We're going to make this ship happen and finance. This is the based on a methanol vessel, and we're going to contribute it to the market. So it is much more better, advantages, competitive. So this is a thing that is happening, and I just want to share it to give you an idea that this is going to be happen, and we should be take care of it. At the end of the day, I just want to say, in the 2024, we do believe that we are facing with some hardship. Interest rates are still go up, and there is fluctuation to the market. The demand in the market also going up and down. But there is one thing that we should consider, only one thing. The new laws which are passing about the decarbonization, zero emission. So if I'm going to hold some of the vessels, it's better to go move forward, new built vessels, methanol, LNG, and try to put the basket of my vessels which I'm having in a more green vessels, because at the end of the day, someday I'm going to face with the law, and for that day I should be prepared in terms of the portfolio which I'm standing on it as a bank, vessel owner, or charter. Thank you so much.
Thank you very much. Thank you very much, Dr. Hakan. Any questions for his? By the way, I must acknowledge the fact that you finished in 18 minutes. You had 25, so well done. I saw you skipping a few slides, so well done, sir. Any questions?
Sorry. Thank you. Thank you so much. So two questions for you. One is about Poseidon principles. So, we have about 32 banks, 600 billion sitting in that. What's your view on that? And two, building a vessel is fine. It's like you have a Prius and a Hummer, but you can run a Prius like a Hummer, and you can run a Hummer like a Prius. What is your plan of monitoring the operational life of the vessel? What's your reporting requirements? How do you envisage that? Thank you.
Regarding to the question that you made about the first side, when we're talking about the Poseidon, when the Poseidon passed, so we came to the idea that so the financial institutions are going to be responsible regarding to the finance that they're giving, regarding to the climate, pollution, and emission. But I do believe that the Poseidon was not enough for controlling the whole and trying to push the investors, the finances, the banks, to actually treat it based on the law. So that's why I think the EU come with the booklets of the sustainable blue ocean finance system, which is going to push, to put the foot on the neck of the finance institution and try to give them that, you're going to give me that portfolio on a quarterly basis, and I'm going to monitor what you are doing. So I just want to say, Poseidon was a start. We are receiving the booklets of the EU. We are receiving the IMO new rules. So in my opinion, Poseidon was a start, and we are trying to go through the phase 5 of the emission of the EMI of the EU. And for that EMI of the EU, which is a zero emission, I think we're going to experience some new, commitments, which is going to be faced by the investor, finance, and the banks. And that is a chain of rules which is happening. And I do believe that we're going to face with so much consequences as we go forward to reach to that level. Actually, I have removed some of the slides from my presentation, which it was about the different phases of the EMI of the EU. But I do believe that if I check on it, the last time I checked, the maritime on the phase 4 was a question mark on it, because they were still thinking how they're going to control this. And even the question that you asked me about that, how this control is going to happen, it is a dilemma for us. Even it's going to be based on the bank's portfolio, or it's going to be based on the reports that they're giving with the intelligence services, or it's going to be from the IMO flag or something like that. But that's a really challenging question.
If it's challenging, should I ask the panelists to add value?
Evening. I'm not sure I'm going to add value, but I actually have a follow-on question, if I may. And the question is, thank you for the talk. It was very informative. You talk about getting ahead of the curve, buying new vessels now that are going to be future-proof. We get the same questions from our clients. What vessels, if you buy a new vessel now, if you order a new vessel, what technology will you back? What fuel will you choose? That's the question. Nobody knows right now, I think. And then that's one question. And then obviously I'll carry to Tony say, I'd like to have 60% financing. And Dorita will say, probably, why are you backing Onia? Whereas the worry probably is, why am I backing a vessel that's got a 20-year life, and it might be a stranded asset in 25 years, because the technology may not be there, or the fuel might go the other way. The fuel choice may not be met.
One thing, right now, what is the problem we are facing? Let's go back to the first question that we have. The problem is about emission. So as long as we've got an asset with a really low emission, I don't care what is burning LNG, methanol, or anything, but I do care when the CBI is coming. The climate bonds are coming, EU, the EMI is coming, and all of them are insisting about one thing: how much sulfur is going to be burned? Is it a fossil fuel base? Is it about the fuel base? What type of the fuel? So I do believe that if you're going to stick to the old vessels and try to go through with these vessels to the markets, maybe today you have value for those vessels, but believe me, in the future, those vessels are going to go as to the scrap or maybe below that. So even if the banks are trying to build up a portfolio and giving more than 10 years finance for those vessels, which are still active, working, scrubbers going there, reducing. But the thing is that you're going to face with a really big on the loan-to-value LTV ratio. You should consider it there. So in my opinion, if the financial institutions are really thinking about giving the finance, they should be really cautious that if you're going to put it on beyond 5 years, there should be a consideration about the type of the vessel. I don't care, in my opinion, which type of the fuel, it should be below and near to the zero.
Well said. So you slipped out of that answer nicely. Well done. Anyone else has a question? Because otherwise we'll have the panel kick in. Okay, panel level, we'll come to it. We put up the Slido bar, so you scan it, and you can type in your question. So there's no ambiguity. It stays on record. There's a paper trail about what you asked. How's that? Okay. So the Slido barcode is there to encourage everyone to come online. Of course, we'll have the mic going around as well, but it's encouraged to put it down so that the panelists who have a view of the screen can also read it. There you go. So Dr. Hakan, thank you very much. A round of applause. And thank you. I must say that he has been kind enough to sponsor the evening as well through his company. So thank you very much. The drinks were nice and the kebabs were delicious. You can come and join us in case somebody has an afterthought of a question. They might involve you as well, please. So how we're going to go about is we're going to go. We also have a special appearance by an ex-committee member of the Nautical Institute, Nijo, who's standing in for Shailesh. He says he's not only good-looking, not only intelligent, but he also has better answers than Shailesh. So I straight away qualified him to be joining our panel, but I want to thank him for being spontaneous and courageous to join our panel. Shailesh is apparently in the middle of buying a vessel, and he says, should I come? Because you will then answer Eugene, and more so David Pereira, for me to losing this vessel, which I have an opportunity to purchase. So if he does purchase, we'll probably influence him to sponsor the next Nautical Institute evening, if we are successful. But without much ado, what I will do is I'll pass the mic around to the panelists. They've each been having 2 or 3 minutes of an opening statement in the area of expertise, and they're going to self-introduce themselves, and then we'll take questions from there. We're encouraging you all to type in your questions on the Slido so that we have less running around with the mic, so to say. I'm going to moderate or try to moderate, representing a flag state who holds the mortgages as close to my chest as possible when somebody finances anything. So I have a skin in the game myself as a moderator, and also I'm the secretary of the Nautical Institute. So I've invited myself as the moderator on this panel. Without much ado, we'll start with Tien, since he asked the most intelligent question after Anuj did. Over to you, sir.
Always very kind, Captain. Good evening, everybody. My name is Tien. I am a partner in the Dubai office of HFW. I've been in the region for 17 years, and so HFW is an international law firm. We have a substantial number of lawyers looking after transactional shipping. So whether it's sell and purchase of vessels, ship finance, shipbuilding contracts, we will be delighted to assist. Now, I think it's fair to say that for the first time in a very long time, there are good reasons for a number of owners and operators to be optimistic. For the first time, various sectors in our shipping industry are all looking quite positive. So whether it's dry bulk, tankers, possibly even containers, even though there's a floated order book at the moment. But if you're looking at gas carriers, especially with LPG, fantastic rates at the moment. And underpinning all of this is, of course, offshore marine, which has had a fantastic renaissance over the last 14 to 18 months. So great positivity all around. But I think not always blue skies and calm seas. On the other side, we've also got a number of headwinds. We've got some geopolitical factors that we need to be aware of, some of which we know and can anticipate. At MEPC 80 last year, we now know where we're going on a decarbonization journey. net zero 2050, with various signposts in 2040 and 2030. Okay, that we can see and we can plan for. Whether we get there or not, that's another question. There are some factors which we cannot anticipate. There are two wars currently ongoing. The war in Gaza, leading to diversions from the Red Sea through the Cape of Good Hope, affecting our industry. There's the war in Ukraine. When it started, it had a substantial effect on the dry bulk sector. Looks like President Trump is going for that. How does that affect the container sector? So a number of questions. So I think that sets the scene. All of this has to be contemplated and discussed in the wider ship finance sector. So hopefully we can have a good discussion tonight.
Thank you, Tien. That was good. Do you want to take that question there, which comes up, and is it relevant to you, or you want to brave it? What requirements are you placing on ESG requirements on applicants for ship finance? Do you have an answer?
I think more probably for Dorita, if I may, it's more of a banking question. But certainly what we are seeing was, I mean, Poseidon was discussed just now. That's the first climate alignment tool, which affects a number of banks which are signatories, mainly the European banks. There's some Asian banks, but it really hasn't caught on much in the Middle East. And that could be because we are so oil and gas focused. But certainly in facility agreements now, there is a very strong reporting requirement. Most facility agreements which we prepare, which we are involved in and review, they have the AER covenant, so the annual efficiency ratio. And that's the standard covenant which you can use to measure the carbon intensity of the vessels. And if you have a standardized reporting covenant, the IMO, the banks, they can use that. They can use that to judge the carbon intensity of their portfolios.
Thank you very much. Enough about boys talking to boys. Let's have Chinar. Let's hear from you, Chinar. Thank you very much for accepting our invitation to join the panel discussion today. Please introduce yourself and let us know your opening thoughts.
Thank you, Captain. Good evening, everyone. My name is Chinar, and I'm a lawyer in the banking and finance practice of Stevens Howard, with a in ship finance. I regularly advise my clients for a mix of lenders and borrowers in a variety of cross-border financing, which include traditional or conventional bank financing and alternative lending structures such as leasing structures. Like HFW, Stevens Howard is also an international law firm and can help our clients with the full shipping life cycle, which includes finance, construction, operations, repairs, sale and purchase, leasing, recycling, and when things go wrong, disputes. In the past year, we have come across various types of financing transactions, which involve traditional banks as well as these alternative leasing companies, which are quite active in the region. We've also seen an increase in ship sale and purchase transactions with ships such as bulkers, tankers, all types. And in addition to that, we've been advising on a lot of shipbuilding contracts and other commercial contracts such as charter party agreements, management agreements, etc. That's an introduction about me.
Thank you very much, Chinar. Nobody's asked you a question, but I want you to take one from the Nautical Institute. What is the significance of the flag of a vessel for a financer? Do you think it matters?
Yes. So the basic answer to your question is that the law of the flag governs the law of the mortgage. So it's a very important part of fundamental part of the financier security. So the financier is always thinking about whether the mortgage that they have taken is adequate security for their loan. And I mean, apart from the fact that their mortgage is governed by this law, there are also other things such as the safety standards of the flag that the financier thinks about, or what are the laws around the maritime means that might take priority over the mortgage in that country. But we've seen different perspective from different lenders. Some lenders really focus on what kind of flag the vessel is flying that they want to finance, and some lenders take a more relaxed approach and they rely on the, for example, the legal opinions that a local counsel might provide on enforceability.
Thank you very much. I must tell you that Antigua and Barbuda are the best laws ever, ever. Just saying. Okay. I don't know why, but they are. Okay. Dorita, please self-introduce you and thank you very much for joining our panel. And please let us know. There are 2 questions waiting for you there. But please introduce yourself and take us through who you are, what you do in your day-to-day and our company. And we are opening 2-3 minutes, please.
Thank you, Captain. Thank you for having me. Hi, everyone. I'm Dorita. I'm with National Bank of Fujairah and I'm in their marine desk. And National Bank of Fujairah, let me tell you a bit about what we do. So for over the last 20 years, the bank has been very actively engaged in the marine sector. It's one of the very few financial institutions within this region that is very into shipping financing. And what we do over here at the bank is we look at all aspects of shipping financing, right from the start to the end. And by that, what do I mean? I'm talking about new build financing. We're looking at refinancing of vessels and right down to the end of green scrapping as well. That's a very quick introduction. Besides this, I've been working in corporate banking for almost the last 20 years within Dubai. And I've recently moved into the marine desk within NBF, where I've been a part of the bank for the last 12 years. So I'll move right ahead to the question. Which one would you like me to take? The one, the first one?
I think Rashid has a very intelligent last question.
Okay, all right. Well, I'll read the question out loud. So, why do local Gulf banks look at other security while giving loans and don't hold the ship as enough security? Now, I can't talk about other banks. I'll give a broad overview. So, different banks have different risk appetites, and some banks, like us, we have an independent desk that looks at shipping as a focus area, whereas some may not. So, I want to say that the ones that may not would look at other forms of collateral. So I would say let's have a conversation after this, and then maybe we can get talking on what kind of security is available. And the next one, which is something I was asked earlier as well, which is what Tien answered. So that's around ESG. So when we at the bank look at financing now, because the world is changing and decarbonization is very relevant. So what we do now is we don't just look at an independent vessel. So we look at the business and their overall ESG policy. Like, what are you interested in? The area is under development, so we are probably not going to have all the answers we want right now. So we're all figuring it out on the go, right? So what we're keen on knowing is what is their strategy? What do they intend on doing? How committed are they? In fact, this now forms a part of our credit approvals as well. So there is some work that's done on that.
And what does a bank offer other than money? Of course.
We'll give you money and we'll take your money as well. So, at NBF, it's a little more besides this. So the approach on shipping finance. So the experience of the bank has been, like I said, over 20 years that the shipping industry has gone through. And we believe that we bring in the expertise to understand what works well for both the client and for us. So take, for example, we are looking at a new credit proposal, or we're looking at a new funding. So we look at something that takes into the average of all the rates. So you look at the average utilization of a vessel, you look at the average rates, average valuation. And why do we do that? We do that because in shipping. So the idea is to kind of, we believe that we have a foresight to see what's expected in the market, and we say in the upcoming 6 to 12 months. And we bring that expertise in while structuring something so that it's not too difficult for the borrower when the cycle turns and neither is it for the bank as well.
What other than NBF, other banks, why are they so slow at it? Because Rajiv wants to know why is, in general, ship finance such a no-go area for other banks. What do you think?
So again, I'm speaking on their behalf.
It's the best way to
the best
talk
way
about other banks.
Other banks, yeah. So I'm speaking on their behalf, so I'll be very careful about this. So different banks have different risk appetites. So say, for example, NBF in itself, it has a couple of specialized areas that other banks necessarily don't look at. And it's as simple as that. Each bank views certain industries as risky and not. So it's as simple as that.
Yes, Tien.
So that's a really good point. Look, when I came to Dubai in 2007, there were a number of banks offering ship finance. Okay, there were the local banks, and there were also the international banks. RBS came in 2009 and set up in the DIFC. Standard Chartered Bank had a specialized ship finance desk set up in 2010 in the DIFC. Then Texas had a small office in the DIFC. And over the years, these banks have moved their coverage of local customers in UAE to either their London or Singapore offices, and have closed their desks here. And that's a pity, but we still see people like Dorita's bank and certain other local banks offering ship finance products. And an interesting twist to this is that even if a local bank does not have a ship finance desk, a dedicated ship finance desk, we've seen them offering ship finance lending through their trade finance desk. And I think that's really interesting because the way they structure it, and they call it structured trade finance, is that you have a vessel, the vessel has a receivable, which is the daily charter hire. Let's say it's on a 1-year contract. That is the receivable that can actually get the bank to classify it as a receivables financing transaction. And then they take the usual security, the assignment of earnings, maybe a corporate guarantee, and oh wow, a bonus, a ship mortgage. But I don't understand a ship mortgage. Why is it registered in Panama, Marshall Islands, St. Vincent's? But it's a nice to have. But that transaction and not being done out of dedicated ship finance team.
It is happening. There is ship finance. Big boys have come and gone. Was the pie too small for them, or there were too many on the same pie trying to eat up the little morsels? You thought?
Yeah, we spoke to a number of them, and they said it's expensive to have a small team on the ground. And yeah, look, this jurisdiction, not necessarily the UAE, but the GCC jurisdiction, is dominated by a number of the smaller owners, and the big guys that come in, they want the top tier credit. They're looking for the likes of the adnocks, and typically the adnocks are the guys who don't need financing, right? So yeah, just limited in what products they can offer.
Got it. Nijo is sitting there and wondering why the mic hasn't passed through to him.
Sorry.
Nijo, please introduce us your new avatar. First of all, the new fit avatar. You still go out at 5 o'clock in the morning doing rounds of the block.
Yes.
All right, this is about ship finance. Please introduce us.
So my name is Nijo, and I was promised free food and drinks by Captain Zarir, and that's why I'm here. But as everybody would know, there's never a free dinner from Captain Zarir, so I've been made to work for it now. So I'm here in front of you lovely people. Lots of you already know me. For those who do not know me, or now you're going to have the misfortune of knowing me, my name is Nijo, and I'm a lawyer. I work in a company in the DIFC in the legal department. The company is called Milavu Trading. It is a holding company which has got investments in commodities, in the agri sector, as well as metals and energy. We are also ship owners, a fledgling ship owner, and we also make investments in various countries outside of the UAE, including Southeast Asia, in the Caucasus, and in Africa. So this is what I do. And in terms of ship finance, well, I'm learning a bit about ship finance from these people as we go along. Maybe I could take a couple of the questions that was discussed before, so that put some things into context. The first question was on the ESG. What are the ESG requirements? I think more than a ship owner asking what the ESG requirements are, from my perspective as being a ship from a ship owning point of view, I think we should be the ones that set the ESG requirements that can be met by us. Because I'll give you an example. In my previous life, I used to be a lawyer in a law firm, and in that firm, we did a transaction where we had it was one of the major touted deals, which was actually read in a joint statement by Narendra Modi and Boris Johnson when Boris Johnson visited India. It was on the electronic vehicle deal that we did. So when we were doing the transaction, we were acting for the bank that did the financing, and there was 3 sheets of papers that had ESG requirements in it. So everybody said, yeah, let's just dump in what the OECD countries require for ESG, and this is going to be the requirements that we give to the market. 3 months passed since the beautiful declaration. I get a call from the legal counsel there, who tells me, like, Nijo, what are we going to do with these things? I don't understand what the requirements are. How will my clients understand? And because of this, their financing never actually took off, because they did not have the parameters to measure, and neither did the clients or the customers have the parameters to actually provide anything. So when you talk about ESG requirements, I think one should understand our own strengths, and then we build into our ESG profile what can be achieved, right? And keep those as just many isn't really fruitions. You keep the basic ones in there so that you can achieve them and show that something is being done, as opposed to nothing being done or everything is kept vague, and then you have attributions of greenwashing, etc., being passed on to you. So you don't need that. So keep it simple. See what you can achieve and show to your banker, your financier, what can be achieved. And I think this is the requirement. So you be the setter, and you tell the banks, this is what I can do. Does that match for your profile in terms of your Poseidon principles or your climate control policies? So that's something.
Thank you very much. Do you have any idea why CO2 emissions were only the focus at COP28 and not greenhouse gases or ESG as a whole?
See, I think one of the things is climate change, and with climate change, I think instead of greenhouse gases, it's mostly about carbon dioxide that people believe to be causing the increase in the temperature. And so when you have the Paris Accord being the one that is set as the threshold, that is, to keep the increase in temperature to less than 1.5 degrees, the increase over the pre-industrial area methods, the easiest target is carbon dioxide, and then you try to see how you can capture carbon, or you can utilize the carbon emissions from your practices. So I think that was the focus. And again, I think there is an overwhelming, again, from my perspective as asset owners and operators, as opposed to policy setters and advisors, the thing is that we are all in a confused state of mind as to what technology at substituting carbon instead of making do with what you have, and trying to reduce the emissions there. Because again, Stevenson Harvard has a program with a consortium called Blue WISP, and Blue WISP provides a software. Basically, in simple terms, it's a vessel traffic optimizing software, whereby what you do is that the whole aim of Blue WISP is to prevent sail fast then wait principle, because a lot of the emissions that happen is when vessels sail fast to the port of discharge and you just wait, earning demurrage till you actually discharge. So if you have just-in-time delivery of cargo, what Blue WISP claims is that you save 1 Argentina per year in terms of emission if you can avoid this sailing fast and then wait. So again, my perspective is that there are different ways in which you can control emissions, including greenhouse gases. But but there are operational efficiencies that can be had as opposed to wholesale changes in technology and fuel. So I think that's a difficult question to be answered for people who have invested into equipment. Remember the time when LSFO and high sulfur fuel oil were almost the same, and all of those people who put in the scrubbers are like, why the hell did we spend millions of dollars on these vessels? And that they're all like, they were in panic. But now when you see the difference, everybody's like, yeah, that made sense. So it is a daunting time, and different people will take different steps to make sure that they're efficient in the carbon rate. So
maybe they want a good consultant to tell them that.
I
Anuj, does that answer your question? With that luck, does that answer your question? That was your
breathe.
breathe.
So I was going to say, don't mind. I'm sorry. I was going to say you have some good news coming your way. So Abu Dhabi Maritime is actually making standards by Maritime for Maritime on ESG. So that's going to be a change coming 6 months. And DD and the National Bank of UAE, the parent bank, Federal Bank of, I'm sorry, I'm new here, so they are making new regulations as well. They're actually co-signing on this program. So DED, FED, and others are co-signing on this program. So you might see some changes coming in the next 6 months. Thank you.
Come on, guys, he said, and he already knows this. Tien, you want to add something to this?
I was going to go somewhere, but I changed my mind.
Okay. So that was the opening comments. Although we do have sliders, but we always like a little bit of interaction, especially when the group is small. So we got the next question for you, Tien, there. And the Nautical Institute, as you see, is very, very intelligent. And is asking very, very nice, intelligent questions. So the shipping industry needs to take steps for decarbonization, as we all have agreed now with Dr. Hakan's opening comments. How can ship finance lenders contribute to meaningful change to meet the IMO 2050 targets, do you think, Tien?
I think we've touched upon that in the discussions just now on Poseidon. I think Poseidon is...
IMO wasn't the IMO targets. Yeah?
Yeah.
Yeah, okay.
Yeah, exactly, yeah.
So do you want to go with the next question? Can UAE banks help bridge a clear funding gap? Yeah, this is you got to play around. But the first question up there is for you.
Okay, so there is a funding gap. Okay, so we take the premise that for the last 15 years, the traditional ship finance banks have moved out of this jurisdiction. Not only have they moved out, the coverage and the clients that they are looking for are the top tier clients. Okay, so then you've got, okay, the leasing companies, the Chinese leasing companies have moved in, the Taiwanese leasing companies have moved in, are very active in this market. And you've got the non-bank alternative financiers who are also flying in into this jurisdiction to look for customers. But to answer the question, can a UAE bank step in to fund the gap? The gap is quite big, and it's probably unlikely because at the moment, honestly, we count 2 UAE banks that have a dedicated ship finance desk, one of which is on the panel with us today. All right, and that's not to say, I mean, we talked about other banks lending on and doing ship finance transactions through other teams, through trade finance teams, but they are still done on a corporate level, i.e. the name to which they are lending to is a strong name. So why do we have so few UAE banks in this sector? I really don't know. Look, we are talking with one other UAE bank who, interestingly enough, is looking to enter ship financing and start a desk, but they're starting from quite a low position. You know, you've really got to get the analysts. You need to understand this sector. Yeah, you don't just go into shipping. You're going into containers, you're going to dry bulk, you're going to tankers, you're going, if you want, going into offshore marine. Each of these sectors have their own cyclicalities, have their own idiosyncrasies. So banks, local UAE banks, very easily, you can go and say, I want my working capital facility, I want my borrowing base facility, I want my letter of credit facility. But if you go into the local bank, the Mashreqs, the UAEs, and you say, oh, actually, I bought a 10-year-old tanker last year, I paid for it, I'd like to refinance it now. I've got a 1-year charter, it's flagged in Panama. In all likelihood, you will walk out empty-handed. Yeah.
So what Dr. Hakan said, PPP, public-private partnerships, is that the way forward, or do you think tokenization is going to take off? Because clearly there is a need in the market. You just mentioned that the sectors that you have mentioned earlier are all doing well. They're all earning good money, good profits. So there is purely a good, healthy bank balance of these sectors or ship owners already for them to source more money. And we still haven't got. So is it just lack of understanding? And that can be easily important in a place like UAE. We can easily get intelligence from outside and put them into banks and start to test. Or is it the green financing, which is the speed breaker? Or is it just there is a change in tide? It's going to be new ways of financing, the traditional ways of bank lending money to maritime. Those days are over. You think it's a new leaf? You think?
No, I don't think so. What is the traditional way? The traditional way is bank debt, right? Yes, okay, we've got bank debt, but we've also got leasing now. And together with leasing, we've got Islamic finance as well. And at the end of the day, I think most shipping companies, whether you're top tier, mid tier, or the smaller owner, are relatively conservative by nature. So your CFO will want to know, how much is this facility going to cost me? When do I, what profit, what interest am I paying? What are my upfront fees? What are my arrangement fees? And if I want to prepay, how much will it cost me? These are things that a CFO needs to know, and I think they're inherently conservative by nature. So if we're talking about PPP, I don't think PPP will go anywhere with stripping. I don't think. I mean, there's some talk about alternative financing, sell and leasebacks. They'll still be with us.
Thank you very much. You want to add something?
Actually, when I'm talking about the vessel finance, so I'm coming from the finance background when I'm talking about it. The thing about the vessel finance, I think the banks, I think they need to take in something education into their head. Honestly speaking, I used to work with the banks. The thing is that banks, yes, vessel in the all over the world, we have made really good materials for controlling and taking care of as a security, as a collateral finance, which is going to be given. And there was a question there actually, why the banks? The vessel is not enough. Okay, if it is not enough, traditional banking comes in the front. We have different tools to controlling the risk. We have the LTV, we have the account pledge, we have the share pledge, we have the assignment of the earnings of the chartering. The banks have everything they need to control a vessel. For example, some of the banks came to the idea that, okay, there's a one vessel company, but you know the vessel owner. Actually, when we're talking about the small owners in the UAE, we can nominate 10 companies which is holding more than 15 vessels. Okay, they have established in Marshall Islands single-handedly. Okay, you can make a combination of all of them and try to assign the earnings, put it into the bank account and try to pledge that account to the special financial loan that you're giving over a specific vessel. I just want to say it is manageable. Why the banks are not doing it? I think somebody needs to teach them. It doesn't mean that there is no any solution. There is a solution for covering the risk, and I can prove it that with utilization and combination of all of these factors, bank and security. So it is the same thing that we are doing in Germany. It is happening right now. And the thing is that the banks are going one more step forward. The banks in Europe, people, they have established chartering department. They have established really renowned holdings regarding to the shipping finance, and they are controlling the vessels.
and they are putting limitation over even the voyages that the vessel that they have financed need to go forward. They're controlling everything. So I just want to say, what do? They say, okay, you have a vessel, it is a clean vessel, put it front, we put a refinance on it, we put it on the SPV, which is owned by the bank, not by the bank, by its subsidiary, and then you're gonna nominate your new vessel, we're gonna take it as a finance, they liquidate 120% of a vessel, not just as a 60%. They're gonna give it to the guy and put it on a charter with their own company, which is gonna be managed on a dual sector, and the person who is going to take the finance from the bank is going to be responsible for all the consequences got out of that charter. So the risk can manageable. I just want to say, banks always want to stay as a bank. They should come in front, get into the vessel, management, chartering, and use the utilization of these pledges, which is available as an account of the earning, assignment of the earning, pledging those accounts, and easily can manage the risk. And I can say, if the UAE banks want to come in, so they should change their way of thinking.
I think the banks will remain banks. They'll not become charterers in this part of the world. But that takes. Thank you very much for your input. But I will call you in if any bank wants education. But coming back nicely, that follows on to Chinar's question there. Common type of securities, because the only thing the bank is looking at, if I give you money, will I get it back with my interest? So what are the most common type of security packages that you see for ship finance in your day-to-day?
So, like Dr. Hakan said, there's mortgages, of course. Bank always wants that. There's assignment of earnings, insurance, acquisition compensations that the bank always takes. And of course, the bank always looks at what kind of earnings the vessel has. Then there are, of course, corporate guarantees that they take from the ship owning company, but also sometimes the parent company of the borrower. There are personal guarantees in this part of the world that you see quite often. Account pledges, share charges over the shares of the borrower or the ship owning company, so that the bank can easily control these companies. And of course, but this was what I said in context of a normal bank loan. In a sale and leaseback transaction, they won't take a mortgage of the vessel because the lender is the owner of the vessel, but the other securities, they usually take all of them.
Dorita, sorry. Dorita, would you ask for my wedding ring if I had to borrow for a ship, my dog or my house? What else would you ask for as a bank?
A lot more than that.
More than that?
Yeah, a lot more than that. So
what is what Chinar says, is that something that your bank asks for, all these?
Standard.
Yeah. And 120%, like Dr. Hakan said. Would you go that far?
No.
No. I thought so. Yeah, good. Look, coming back to the question about ship owner, I can see one of our committee members who's a small ship owner. There's a nice question by the Intelligent Nautical Institute. I want to pass that to you or to Nijo, who wants to take it. What advice would you have for small ship owners who want to look for quick ship finance? What's the best way to maximize the chances of success? Do you think? You're the lender. Good looks, yeah. That I think our respectable committee member has.
That always helps. Yes. A couple of things that we look at would be strong management capabilities. So, what your track record's like, what are the markets you engage in? Depends on asset to asset as well. So I can't give a very broad-based answer. But for smaller market players, so like I said, financials is what you'd look at. You'd look at track record, what you're asking for. Broadly, that's it.
New player.
So, when you say new, what do you mean? Like position another market or like brand new? Yeah. So that's exactly what I was leading to, which is like you're looking at track record as well, right? Because banks would like to partner with somebody with adequate experience as well. So both parties can have like a mutual benefit out of it. So we look at risk assessment that way.
So Eileen is asking, would you look at the assignments, what kind of charters the vessel has? Would that be sufficient to pay back the fine? Would that be something you look at? The last question by Eileen.
So the question reads: we know that the vessel itself or trade finance through assignment of earnings may not be sufficient to get finance from banks. What else? What else do banks look at when they say no? So let me rephrase that and say, what else do banks look at to say yes, right? And that leads in again to what I just said. So you're looking at track record. You're looking at what kind of vessels do they have? How long have they been in the market? What kind of diversity is there? Of course, right now you're looking at ESG metrics as well. What are they looking at decarbonizing in the future? What's their outlook? And of course, very importantly, what's their ask? So, like I said earlier, so when we look at granting loans or granting credit facilities, we look at something that works for both parties. So when the market cycle turns, both parties are like safely guarded. I hope that answers it.
I don't know who asked that question, but
Eileen.
Eileen, I think asked the question and disappeared very conveniently. Okay.
Nijo may add something more.
Nijo, small ship owners, what do you think? What's your advice? Where do they find money?
I think it's mostly in your presentation. I think in the sense that I was in London for one of the Marine Money conferences a couple of years ago, and they were actually talking about the shift in what is perceived to be traditional asset finance in the European segments, because one of our main grouses as lawyers here, when you compare to the traditional ship finance markets of the West, was why are you looking at it? Why do you ask for a corporate guarantee? Why do you ask for a personal guarantee, and so on and so forth? Because the traditional ship finance markets in Europe was looking at the asset itself. But in that conference, in the Marine Money, what we've understood was that there is being a paradigm shift in the way European banks are also seeing how they make their offering, how they would make their lending to the borrower, how would they make their offer, and they are saying that it is a holistic corporate outlook that is now the key, which means that you're just not looking at how old the vessel is or how new it is or what is the utilization value of the vessel, or how does the secondary market look like in case you want to liquidate the asset in case of an enforcement scenario, but rather, does the man know his business? Does the man have a good plan for the business in case it turns bad? Is the man and his business, man or woman, but I'm sorry, so I use both genders in case we're looking at this.
You get a right hook from Dorita and Chinar from there.
She can hook as well, so I know it's you. But the fact is, I think we need to. The banks are looking at seeing a holistic corporate approach to see if they have what it takes to carry on repaying the bank at the price that the bank wants, so that there is a win-win on both situations. Definitely having a good asset helps, but even if you don't have the greatest asset, the way in which you manage the asset, and like I said, if it is a container vessel who does not practice the sail fast and then wait sort of phenomenon, it actually adds value to the bank to say, listen, I've got a ship owner who is reducing his emissions by efficient practices, efficient operational values. So this is something that could be done as well. So having a beauty parade, having yourself look nice, have a good linear sort of holding structures, have a good robust management profile, have good people like Constellation Marine taking care of your vessels and flagging it with Antigua and Barbuda flag, right? Financing it with NBF and who else? And you need two lawyers. You need Hon.FIIMS and Stevenson Howard to help you. I think this will help you secure good finance.
You are the plug king of the panel. Very good, well done.
Okay.
But very aggressive, anonymous asked for the industry as such. I think there's a underlying very good